15 minutes of chaos that shook the world's biggest market.
What the heck is going on down here? I don't know. There is fear. This is capitulation, really.
All the way down. 2010, without warning, the US stock market and futures markets just crashed.
Can't be there. That is not a real price.
The flash crash, which wiped $1 trillion off the value of American companies in 5 minutes.
To look at a price chart, it looked like a kind of runaway elevator.
It took authorities 5 years, guys, to track down this lone British trader allegedly involved in a 2010 flash crash.
Navinder Singh Sarao, dubbed the Hound of Hounslow, has been accused of manipulating the market.
US regulators claim he made about $40 million.
15 minutes. That's all it took. 15 minutes of chaos that erased $1 trillion from the world's biggest financial markets. Traders stared at their screens in disbelief. Prices collapsed, liquidity vanished. Nothing made sense. People kept asking the same question: what the hell is going on? This was May 6, 2010, and this moment would go down in history as the flash crash. But years later, instead of blaming the system, regulators blamed one man, a lone trader from a bedroom in suburban London. His name was Navinder Singh Sarao. On May 6, 2010, without any warning, the US stock market and futures market began to collapse. In just minutes, prices dropped at a speed never seen before. Blue chip stocks traded for pennies. Indexes fell hundreds of points. Then, just as suddenly, everything bounced back. To anyone watching the charts, it looked like a runaway elevator. In 5 minutes, nearly $1 trillion in market value disappeared. Authorities were stunned, traders were terrified, and no one had a clear explanation. At first, investigations suggested no single cause. Markets were already tense. Algorithms were reacting to each other. Liquidity was thinner than it appeared. But the public wanted a name, a faith, someone to blame. 5 years later, regulators announced they had found their man, Navinder Singh Sarao, dubbed by the media as the Hound of Hounslow, a British day trader living with his parents, trading from a bedroom. US regulators accused him of manipulating markets and claimed he made around $40 million. To the outside world, he sounded like a criminal mastermind, but when journalists actually went to his neighborhood, what they found was very different. A working-class street, modest houses, no signs of wealth. People asked a simple question: if he really made tens of millions, why is he still living here? Navinder wasn't born into finance. He grew up under the Heathrow flight path in a working-class area of London. He was quick-witted, hot-tempered, but unusually gifted with numbers. He had a natural talent for arithmetic and rapid mental calculation. After university, he didn't get recruited by a big bank. Instead, he answered a newspaper ad that simply said, "Wanted futures traders, must work well under pressure." This wasn't JP Morgan. These were small trading arcades, brutal environments where you eat what you kill. No salary, no safety net. You survive only if you're profitable. And Navinder thrived. He specialized in trading the E-mini S&P 500 futures, one of the most important financial instruments in the world. Nav had an unusual ability to read order flow, to sense when markets were about to move. He became obsessed, so obsessed that he isolated himself from other traders. He moved his desk away, wore industrial ear defenders, not headphones, just to block out noise. To other traders, he became a mystery, a near godlike figure. They saw the size of his trades, the consistency of his profits, and they couldn't understand how he did it. By his late 20s, he had already made millions. During the 2008 financial crisis, Nav made the trade that defined his career. Markets were collapsing. Lehman Brothers had failed. Fear was everywhere. Nav believed governments would step in, so he bet everything he had, millions of dollars, that markets would recover. He timed it perfectly. The US government announced a massive bailout. Markets surged nearly 20% in a week. Nav went from $2 million to $15 million almost overnight. But strangely, his life didn't change. He didn't spend the money. didn't tell friends, didn't move houses. For him, money was just numbers on a screen. What really frustrated Nav wasn't fairness, it was high-frequency trading. Algorithms running at lightning speed, buying milliseconds before others, scalping tiny profits millions of times. To Nav, these machines were squeezing him out. So, he decided to fight back. In 2009 and 2010, he built his own algorithm, not to trade, but to manipulate perception. Nav began placing massive orders he never intended to execute. Orders designed to scare the market, to push prices up or down, and then cancel them instantly. This tactic is called spoofing, and it worked. From his bedroom, he could nudge one of the world's largest futures markets. On some days, he made hundreds of thousands of dollars. On May 6, 2010, markets were already fragile. Fear was high, volatility was rising. Nav's algorithm poured sell orders into an already unstable system. Then, around 1:40 p.m. New York time, he shut his computer off. He had made nearly $1 million that day. 1 minute later, the market collapsed. Nav wasn't even trading when the worst of the crash happened. Initial reports found no evidence of manipulation, no mention of Nav, no bedroom trader. But years later, a whistleblower noticed strange patterns in the data. Regulators dug deeper. They found layering, repeated order cancellations, clear signs of spoofing. In 2015, Nav was arrested. FBI agents showed up at his parents' house. As he was led away in handcuffs, he asked one officer if he could record a football match first. That was Nav. Nav faced 22 criminal charges, a possible sentence of 380 years. But something unexpected happened. Authorities realized he wasn't a typical financial criminal. He cooperated, helped regulators understand market manipulation, exposed how abuse really happens. By this point, Nav had lost almost everything. His money? Gone. Bad investments, scams, blind trust. Despite making around $70 million over his career, he was now penniless. Navinder Singh Sarao pleaded guilty. He was sentenced to house arrest. No prison, no dramatic ending. Just a return to the same place where it all began. Cycling around Hounslow, playing football with friends, grabbing food at McDonald's. The money never mattered to him. So, did Navinder Singh Sarao cause the flash crash, or did he expose something far bigger? If one trader can shake global markets, what does that say about the system? The flash crash wasn't just about one man. It was a warning about speed without safeguards, about fragile liquidity, about markets that look stable until they aren't. And that's the real story.